Hi everyone, welcome back to Be Rich. What am I going to talk about today? Today I'm going to talk about something a lot of you have been asking me about in Instagram and a lot of you have been struggling with, which is portfolio rebalancing. All of us have a portfolio. Portfolio is nothing but the name given to our demat account where we have all our stocks, whichever shares you're buying. It's kept inside that. And that entirety is called a portfolio. That includes bonds, includes stocks, and your mutual funds. So there are three segments in your portfolio. You have the mutual funds, you have the stocks, and you have the bonds. And it's important, like how when we go around in our lives, we accumulate a lot of things. Like we keep clothes in the cupboard and we keep things on our table. Now and then we take stock of everything, clean our table, put things in order, organize things, categorize things, take all our clothes out, fold it back, and arrange the clothes again. So we have a bit of order in life. So we know what we have. And before we buy anything, we know, okay, I organized my cupboard and I know this is missing, or I organize the refrigerator, the pantry cupboard, and this is missing. So I need to buy this. You make a note and you write down a list of things. Same way, every good investor should do this. Take stock of what they have. So when they're investing, they know, okay, I've already accumulated so much of this, already invested in this sector, or I've already done so much of sipping, to take stock of it. So before you start investing again with your coffee tiffin, you realize, okay, I need to hold on in this. I should not buy any more t-shirts. I've already have too many t-shirts. Like my wife keeps telling me, we don't stop buying t-shirts. You have so many t-shirts. You're not even worn some of them. I'm like, yes. But when the advertisement hits me, I get so tempted looking at the design, like all of my boys do. I also fall victim for it. This happens in stocks too. When Anand is talking about a certain company over and over again, or is talking about a certain sector over and over again, we tend to keep on hitting on that, thinking Anand is talking about it, or whomsoever is influencing in our life. They keep talking about it over and over again. And we keep on buying that share or segment over and over again. This is why timed interval rebalancing is important. Timed interval rebalancing is that once in 2 months, once in 6 months, you set yourself a rebalancing window. Usually annually or semi-annually works the best because that gives you enough time, because we're not traders, we're investors, and we invest for the long haul. So we don't need to rebalance on a weekly or a monthly basis. We need to only look at it every 6 months to a year. Once a year is good. And this is the end of the year, so it's a good time. Most markets will be looking at a holiday kind of window right now. There won't be much activity in the market. So it's a great time to look at your portfolio and go through it with a fine tooth comb. Like I said, there are three portions to your portfolio. One is your mutual funds, and one is your stocks, and will be your bonds. And depending on your risk appetite and your goals, like I've said a million times before, and your timeline, you should roughly know where you're going to and what kind of returns you need from your portfolio to achieve that goal. I'll say that again. You should know where you're going, how much time you have, and what kind of a return your whole portfolio, all your baskets of investment should give you to get to that goal. So that is your rate of return, where it should be. So then you look at all your portfolios, you see how much your mutual funds is giving you and the weightage of that percentage. These are all simple maths, and you're finding it difficult to do, you can use Excel sheet or Google Sheets. So your mutual funds, you see the returns it's giving and the weightage of that. Then you take all your stocks, see the kind of returns it's giving and the percentage of weightage of that in the total. Then your bonds, if you have any bonds, what is the weightage and what is the returns that's giving the weightage of that. You combine all of it and you calculate and you get to that number. And that number should be close to the rate of return you need to be at. And if you're close to that, well and good, then you can move on to the next step of looking at the individual basket. If your number is not matching to that number, then you need to look at the three pillars of your portfolio and you have to see which one is falling really short. And you need to focus a lot of attention in that more than all the other three portfolios. Then you prioritize the one which is falling short the most, then the one which is falling short the second, then the one which is falling short the third. So that way you rejig and then you try. But if your overall average is close to your targeting number, then you don't need to worry about that. Then you can start doing what I said individually. So then if you're matching, then you come to this step, which is you take each one. So you take mutual funds, then you see the weightage of your mutual funds. I advise only passive funds, and Anand also talks about passive funds. So in your mutual funds, in my mutual funds, if you see, I'll only have passive funds. If I have any non-passive funds, active funds, I'll try and exit those funds and I'll try and stay inside passive funds. So that's what I will do with my mutual funds. When it comes to stocks, I'll have a basket of maybe 5, 6 companies which I'm looking at. And I'll usually try and spread my investment equally in those 5, 6 segments. And if there's any specific company which I like a lot, then at max, it might be a double compared to the rest. I will not try to keep myself more exposed in any one stock just because I like that company more. Yes, because I like and it's doubled, as I'm spreading my risks and my bets on all of them, that one will also increase. But I should never be in a position just because I like ITC. Out of my 3 lakhs, 80% of my money is sitting in ITC. That's not a good position to be in. So I would, right away, if that is the case, let's say I've been very excited this year looking at ITC prices and I've just been buying ITC the entire year. Now that I've reached the end of the year and I see I'm having a lot of ITC. Out of the 3 lakhs, 80% is sitting in ITC. That means I need to reduce my ITC, sell some of my ITC and move into the other stocks which are also in part of my 5 stock or 6 stock, whatever stock bouquet which you have. This is what I would do. And I would advise you to think about this. So keep that in mind. That's the way I would suggest that you look at it. So you're proportionally rebalancing it, so it makes sense. The same is true with the bonds. If I've been excited and I've been buying a certain company's bonds, and I find out 60-70% of my money I've lent to one company, I need to assess it and I need to move my weightage. Yes, maybe that bond is giving a lot of good returns. It is giving the highest interest yield or whatever you want to call it. But at the same time, I'm exposing myself excessively to that one company. So then I would rejig myself and reorientate my bonds such that I spread my bets evenly. Try and bet. And the same kind of philosophy which I have in stocks is where I maintain in bonds. If any company which I like a lot, that bond I like, at maximum I'll be double in that position and I will not expose myself more than that. You should never be in a position where 80 to 90% of your funds in the bond is all sitting in one bond. And that being said, if you have only 1 lakh and the first bond you're buying, of course you cannot split that bond into many. I'm talking, let's say you have 10 lakhs, 12 lakhs, 20 lakhs in bonds, then you should have it spread. If you have only 1-2 lakhs, you don't have to worry about it. You're still building your portfolio. The same is true in stocks. If you've just started buying stocks this year and you have only accumulated 1, 2, 3 stocks, don't worry about it. You don't need to worry about rebalancing. Rebalancing is something which you do when you have accumulated enough substantial amount of savings and investment in these different pillars, then you can look at rebalancing. I hope this video has been of use to you. This is the approach which I take, and I suggest you also try to pick up some similar kind of approach. And stock taking is a wonderful thing to do. So this kind of rebalancing, doing it timely, and also what it gives you great insight into what you're holding. Most of us don't even realize how much we are holding and what our portfolios, where we are taking exposure in. Because sometimes you'll read something in the news and you'll be like, okay. But you won't realize you're holding that bond, or you're holding that in a mutual fund, or you're holding that even in stock. You have forgotten about it. So always keep an eye on this at least once a year or once in 6 months. That should be very useful and fruitful to you. Thanks for watching the video. I hope you enjoyed it, and I'll see you in the next one. Bye.
So after Kuwait, my team has decided to do an event in Trivandrum. Those who are desirous of meeting me in Trivandrum can contact our team at trivandrummp@gmail.com, the mail ID given below, or the WhatsApp number given below. My team would fill in you with the details. The event would be in January 2024. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.